Hey everyone, welcome back to Corporate Decoder, the place where we peel back the layers of corporate speak to get to the real story, especially when there is talk of asset-backed notes and underwriting agreements that sound like they're straight out of a chess match. Today, we're diving into a report from Mercedes-Benz, Auto Lease Trust 2025B, a document filled with the kind of financial mumbo-jumbo your average person might tune out, but which holds important clues about how big companies manage their money and how they get it. What we're looking at here is a snapshot from October of 2025, a time when the company, specifically Mercedes-Benz Auto Lease Trust 2025B, was getting ready to do something big. They were issuing what they call asset-backed notes, totaling a cool $1,027,500,000. This is essentially a way for them to raise a lot of cash by pooling together assets. In this case, likely car leases, and then selling off pieces of that pool to investors in the form of these notes. It is a common financial tool for large companies that need significant funding.
The key players here are the issuing entity, Mercedes-Benz Auto Lease Trust 2025B. The depositor, Mercedes-Benz Trust Leasing LLC. And the sponsor, which is Mercedes-Benz Financial Services, USA LLC.
Think of it like this. The issuing entity is the special purpose company created to hold the assets. The depositor is the one that actually packaged and transferred those assets. And the sponsor is the main company whose operations generated the assets in the first place. It is a bit of a complex structure, but it is designed to separate risk.
The fact that the issuing entity is incorporated in Delaware isn't unusual. Delaware is a popular state for setting up these kinds of trusts and corporations because of its business-friendly laws.
Now, the really interesting part for us on Corporate Decoder is where the money is made and how it is being handled. The report details the entry into what is called an underwriting agreement.
This agreement is essentially a deal with investment banks Credit Agricole Securities USA Incorporated, Santander US Capital Markets LLC, and TD Securities USA LLC. These banks are acting as underwriters, meaning they are the ones who will help sell these new notes to investors.
For them to do this, they are signing a contract with Mercedes-Benz Trust Leasing and Mercedes-Benz Financial Services, USA LLC.
This $1.027 billion issuance tells us Mercedes-Benz is confident about its lease portfolio and its ability to service this debt. They're essentially saying, look, we have these leases. They generate steady income, and we are willing to package them up to get cash now to do other things like expand or finance more cars. Beyond the financial deal itself, the filing also mentions that the chief executive officer of Mercedes-Benz Trust Leasing has made certain certifications. These are often required for these types of offerings to give investors confidence that everything is being handled properly and legally.
It is a way to confirm that the information provided meets regulatory standards.
Then we see a whole list of other agreements that come into play. There is an indenture, which is a formal contract between the issuer and a trustee, in this case, U.S. Bank Trust Company National Association, that governs the terms of the notes. Think of the trustee as the watchdog for the note holders, ensuring the terms of the deal are followed. There is also a trust agreement involving Wilmington Trust National Association as the owner-trustee. This agreement outlines how the trust itself will be managed.
And importantly, there are sale agreements. A first-tier sale agreement between MBFs USA as the seller and Mercedes-Benz Trust Leasing as the purchaser. This is where the original leases are transferred from the financial services arm to the trust leasing entity.
Then a second-tier sale agreement where Mercedes-Benz Trust Leasing sells those assets to the issuer, the one that's actually issuing the notes. This layering is common in securitization to create a clean structure for investors.
We also see a servicing supplement where MBFs USA, as the servicer, agrees to collect payments from the car lessees and manage the leased vehicles. They are the ones doing the day-to-day work of managing the underlying assets.
And an asset representations review agreement with Clayton Fixed Income Services, LLC. This is a newer requirement often seen in these types of deals, where an independent party reviews the quality of the underlying assets to make sure they match what was promised. It's about ensuring transparency and reducing the risk of fraud.
There are also account control agreements. These are vital for ensuring that the accounts holding the money from the leases are properly managed and that the collateral supporting the notes is protected. They specify who has control over the funds.
And a titling trust account control agreement. This relates to who holds legal title to the vehicles financed within the lease contracts.
Finally, an administration agreement where MBF's USA acts as administrator for the issuer. This covers the operational aspects of the trust.
The signatures at the end are important too. Stephen C. Poling. Assistant Secretary for Mercedes-Benz Trust Leasing LLC, signed off on this report on the 20th of October, 2025, confirming that the company is making these filings as required. Looking at this from a broader perspective, Benz Auto Lease Trust 2025B is using a standard but sophisticated financial mechanism to raise capital. The health of this issuance hinges on the performance of their underlying auto leases. If lease payments continue to be made reliably, this is a sound way for Mercedes-Benz
to fund its operations and expansion. However, the risk lies in any economic downturn that could lead to higher default rates on these leases. The multiple agreements and trustees in place are designed to mitigate these risks for investors.
The company's direction here is one of leveraging its existing customer base and contract portfolio to fuel future growth. The strength is in its established brand and likely strong history of lease performance. A key opportunity is continued access to capital markets at favorable rates. A potential risk is any significant economic slowdown impacting consumer ability to make lease payments. Overall, the company appears to be strategically utilizing financial instruments to maintain its competitive edge. All right, that is our breakdown of this fascinating financial filing.
What's your take on these complex deals that are the backbone of global finance? Do you find them fascinating or a bit overwhelming? Let us know in the comments. If you found this analysis valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate filings.
And don't forget to join our Discord community linked in the description below for more discussions and insights. Thanks for watching. See you next time.